I just added 260 shares of BLOX to my income portfolio. And no, it's not just another yield chase. This ETF actually fills a gap in my income strategy that even funds like ULTY and QQQI couldn't. So stay tuned. Welcome back to Simply Money. If you've been following Simply Money, you know I'm building an income portfolio designed to pay me every single week. No hype, no guessing, just steady cash flow. I've been transitioning my portfolio from a growth and dividend growth portfolio, focus more on income. Still have some growth and still have some dividend growth with my SCHD and SCHD, but I'm focusing more on the income generation. And BLOX is the newest addition to that strategy. Today, down exactly why I bought it, what risk I'm watching, and how it fits into my overall passive income plan. Let's take a look at what BLOX is. BLOX is an actively managed exchange-traded fund, an ETF that provides exposure to blockchain technology. Its goal is to enhance income and provide portfolio diversification. It blends digital asset-related investments and traditional income-generating securities to capture growth in emerging technologies while maintaining a focus on risk-adjusted returns. What drove me to go into BLOX is not only its nice, healthy distribution, which if you take what it's distributed so far and you average that out and then you multiply that by 52 weeks, you're looking at about a 30% distribution. But it's also showing strong results in NAV growth because its main focus is asset appreciation with a strong income as a secondary. Let's look at this as we look into our chart. As I open up with BLOX, this is what we're looking at. Our sheet here. As you can see, I've put in the 260 shares that I've bought, the price at $26.46, which is up from 22 something from inception. We're going with a 16-cent distribution because I like taking the average, not its latest, because the latest was 18 cents. It's had a 14 cent and up to 18 cents. So I'm just kind of going with an average here. Its share price has grown by about 18% and its dividend has grown by about 28% in its short time that it's been around. I'm just using these numbers to start. All these yellow fields are what you can put in and change and play around with and get different scenarios. These fields here, the initial drip, I'm going to drip 100% for 3 years. That's the approximate time that I'm looking at before I start utilizing the income. And then I'm probably going to go down to about 25%. But again, we'll see when that time comes, but this gives me an idea and it'll show us what it happens. We'll go through this sheet real quick and see what my BLOX will end up doing with these projections. Week 1 of year 1, you can see I'm getting paid a distribution of $41.60. I'm able to buy another share and a half, and there's no cash paid out because we're doing 100% drip. And you can see as we go down this, we'll just see that as this slowly creeps up week after week, it's just a steady incline, a little bit more. Your distribution is growing little bit by little bit. So let's go to year 2. Year 2, you can see we're starting out here. Now we're getting a distribution of $73 and we're getting about 2.36 more shares, and that brings our total value up to about 11,000. Still not getting any distribution because we're doing 100% drip. By year 3, our distribution's up to $134 a week, and by year 4, this is when we start taking that distribution. So we're starting to see that drop as far as how many more shares we buy, because out of this $252 distribution, 25% of it is going to buy new shares and 75% of it is coming to us as income. In this scenario, if I just drip 25% for the remainder of the time that I held this, you can see I'd get about $190 a week while still increasing my shares. That way my distribution increases and my payout, my cash amount, increases week over week. And people might look at that and think, oh my gosh, that's really minimal. Okay, week 1, I'm getting $189. In week 2, I'm only getting $190, just barely over $1 more a week. But think about that if your job paid you $1 more every week. Let's go down here to, let's just say 10 years. So 6 years later, now you're getting $1,808. That's pretty nice how that dollar a week begins adding up, and it jumps even more because that percentage is on a bigger number. This is just a way you can look at this. You can play around with it and see. This is BLOX, BLOX, the new addition to the portfolio and what we're looking at. These are high rates. We may not get that. Let's go to a more modest rate. Let's just say we're going to get 8%, and here we're going to get, just say 8%. Let's just say it stays even. Let's see what happens here for those who are curious. Let's see where we're at year 4 when we go to start using this. Yeah, we're getting $134. We're getting $100 in payment. So it's not growing as fast in that situation, but it is growing. This has a good chance of having a very high NAV growth because this is a very volatile and high-flying ETF. And the annual growth rate on this should continue to go as they get premiums off of this and generate that income for you. But after 3 years, that's a pretty nice balance. You've more than doubled your money in 3 years. You have to remember, doubling your money in 3 years is an incredible opportunity. And if you're able to do that, there's nothing in here to worry about. You have to look also here with this slower growth rate. We're looking at year 2 and we're only at 17 cents. It already paid 18 cents this past distribution, but because we're starting just lower to give it a little bit more of an average, it took until week 22 to get to 17 cents and then doesn't get up to 18 cents until year 2, week 10. It takes 62 weeks to get up to where we're actually at right now in that distribution. So I always like going on very conservative numbers when I do this. I'll play with some more numbers that maybe are a little more aggressive to see what it could do. But when I'm really planning, I go with the more conservative numbers. Feel free to grab a copy of this. Just down in the description below, there's a Buy Me a Coffee link, and you can look at all the spreadsheets that we have to offer there on the channel. I like using these to just forecast and see what different funds might do based on past performance. Again, I'm not telling you to buy blocks. This is what I'm doing. This is for educational, informational purposes only. If you have any comments, leave them down below. Tell me what you think about blocks. Do you think this is a good addition to the portfolio? I have a lot of exposure in different things. If you've followed my channel, you're probably aware of some of the other exposure, other holdings I have. So this might make more sense to you. If this is your first video watching and you think this is all I have, then you might be thinking it's crazy. This is just a very small portion of my income portfolio. I have an income portfolio, I have a growth portfolio, and I share my income portfolio moves and what I'm doing on this channel. And I appreciate the input and the comments that I get. I appreciate the support from subscribers and viewers. Leave a comment down below on blocks. What are you thinking about this? Do you think it's going to hold? Do you think it's going to take off? Or is this going to be another NAV erosion type of ETF that we have to watch and really make sure we're reinvesting these distributions to maintain our balance? We could go with not doing any. We're just going to go 0%. And so we're going to get $41 a week. But where would we be at year 4? At year 4, it shows that we are at $52 a week. Again, so if you're not dripping, you're not having that snowball take place. That's why for me, I'm starting now before I'm going to need the income to get a snowball really going on the income portfolio portion, allowing this compounding to take effect and to get ready to begin to use this. Because $48 a week, that's a nice little addition off of a just under $7,000 investment, producing basically $50 a week. Nothing to be ashamed about there. Let's just say we do 100% drip, again, for those 3 years, and then we don't do any reinvestment. At the end of year 3, we kick up, we're getting that $134, and it begins just growing each week for us. So, you're looking at a little over $500 a month off of a $7,000 investment that you make now and let it snowball and then begin to use that distribution. Again, lots of options that you can do with these. That's why people like the weekly income, because it gives them flexibility. Even if you're not taking the income, you can build that distribution snowball and get it really accumulating for when you're ready to do that. You can reinvest into other funds. You can reinvest into the same fund. Lots of options. It gives you much more flexibility, and that's why a lot of people are really liking these. Tell me if you like the weekly payers down below, and I appreciate you joining me. We'll see you next time on Simply Money.